that backdrop, let's bring in Mish. She's chief strategist at marketgauge.com with more on what she is watching right now. So a very busy week. Mish, nice to see you. What's on your mind right now?
Well, we've been sort of looking at the development of the possible stagflation theme for quite some time. Now, there's no denying that the market is telling you a story that the growth stocks once again in the broader breadth has been better with the new all-time highs. But there are still pockets to be concerned about. Those are the pockets we're watching very carefully. Transportation probably being at the top of the list. Retail right behind it. They have not really participated in this rally other than the quick pop that retail had with the meme stocks. And the statistics coming out, yes, of course, everybody is so happy about CPI, but the import numbers came out higher. So we still have a nuanced inflation scenario. And I think it's really going to come down to what the Fed does from here. Pausing may not necessarily control certain aspects of inflation. Certainly reducing rates might give certain areas a pop, but could also goose inflation further. And they don't seem to be interested in hiking it all. So I think you've got kind of choice A, choice B. And then, of course, there's the world at large. Also an influence here with what's going on with China and Russia, and not to mention the geopolitical mess that we have in the Middle East and still going on with Ukraine. So that's how we've been trading. We've been picking our spots very carefully. We're definitely into commodities, more energy-related commodities, even uranium, natural gas is bottomed. Mm-hmm. And in terms of equities, more defense-oriented, a couple of other AI-generated stocks. We've been back into Coinbase again. So patience is a good thing right now.
Patience, but, getting out of the market would have left some investors behind the curve. There's that so-called sell in May adage in the markets, but here we are with record highs as we've moved through the month. When you look at the momentum of the markets, what do you see right now?
Well, the sell in May, right? I mean, adages have never been a good trading plan. And people who got out of the market, I'm not really sure why. There hasn't really been any substantial correction. It was a soft correction. The only reason why I would say at this point to get out of the market is if, as I mentioned earlier, transportation, that whole index, which is a huge job creator, number one, not to mention it's 6% of our GDP, and trucking is still how most goods are moved around. If that starts to falter, you have to say, what is the weather vane? What is that trying to tell us? But otherwise right now, we have to say that the momentum is to the upside, and clearly we haven't even had our NVIDIA earnings yet. That saved the market last time, so market doesn't need saving. Now it just needs reasons to stay cheerful.
And in terms of the kinds of investments, you alluded to areas that you've been nibbling on, but what kinds of stocks are you looking at in the market right now?
Well, AI being such a huge buzz, we're outside of the obvious growth stocks. And Microsoft, by the way, still very much in a trading range, hasn't gotten through that 430 level. We started to look at interesting places like Symbotic was one stock that does AI in terms of their automated robots for warehousing. And it actually, because of AI, teaches itself along the way, and it's very efficient. It's also very expensive, but the stock had reported earnings, and even though it showed a loss, projections for second quarter is for the loss to be less. So that's been on the radar. We like Palo Alto. We've been in that for a while. I still really like the diet drug stocks like Novo Nordisk. I believe at some point next wave will be more of what I'm calling the vanity trade, which would mean areas that consumers will go to for self-improvement based on the fact that they have lost weight and have kept it off. I really like Pfizer still. At this point, I think it might have bottomed some of the other areas in the biotech space. And interestingly or not enough, rather than looking at buying long bonds at this point or through the TLTs as a safety play, we've been accumulating Swiss franc, which is not something you hear about too often.